Welcome back to Bloomberg Markets. Well, you heard right there the industry minister, François-Philippe Champagne, who approved Rogers' $20 billion takeover of Shaw this morning and prioritized a need for a fourth competitor, which, based on Quebecor's newly acquired Freedom Mobile business, is in the spotlight. Our next guest knows Freedom Mobile well. He started it. Anthony Lacavera launched Win Mobile before selling it to Shaw, a decision he has suggested at times he regrets. His firm Globalive wanted to buy the business from Shaw last year as the merger talks played out, and oftentimes felt somewhat shut out of the process. Anthony joins us now with his reaction to this federal government decision. Nice to have you with us. Appreciate the time.
Thanks for having me on, John.
I guess I'll start very specifically, Anthony, with the way by which the industry minister described the decision. What was your take on that?
Look, I think, unfortunately, this government, like in the past, has been significantly and easily outmaneuvered by the telecom oligopoly. We are going to see prices sequentially go up month over month, quarter over quarter, year over year. Prices are going up. Investment in innovation is coming down. And customer service, customer experience is also going to weaken as a result of this combination.
The industry minister seemed ready for such questions from the media and said, well, look, the buck stops with me. And if we don't see that materializing, I'm ready to take more steps in Ottawa to avoid that happening, but also some of those enforcement measures that are tied to this deal, the conditions that he laid out today as well. What would be your take on that?
Undertakings have been attempted over the last 25 years since I originally entered the industry when deregulation first happened in the late 90s. Undertakings have never worked. They're not enforceable. And what we will see is a long game, which the telecom major players, in this case Rogers, Videotron, and of course Bell and Telus, can all play a very long game. And they will easily outlast this minister. When government turns over, there will be a new sheriff in town, and there'll be the same set of objectives. But the fact is that these businesses are complex, and driving policy with headline price, things like let's make prices the same as in Quebec, which is ironic because Quebec prices are, of course, much higher than the rest of the world. So it's nothing to aspire to. But that type of headline price objective just is ineffective. I'm encouraged to see some penalties attached with these undertakings, but the reality is that they won't be enforced, and we're going to see a situation where there is an entrenched oligopoly now with our wireless companies all owned by cable and phone companies. This structural problem is what Canada has to deal with.
So would that then, in your opinion, explain why there was so much emphasis on having a fourth player today? I mean, certainly some of the messaging from the industry minister was he didn't seem eager to see, as a result of Shaw and Rogers coming together, say, you know, a conversation around, let's say, Bell and Telus coming together. In full disclosure, Bell is the parent company of BNN Bloomberg. But there are other players, and you yourself once was one of those startup players that are trying to build beyond the biggest of the bunch. Is acknowledging sort of the importance of having a fourth player helping to level the playing field, in your opinion, a view that it's going to be difficult for anybody else to get anything started in this country?
Well, I think that the fourth carrier discussion is, the shiny object the minister wants everyone to focus on, whilst he's approving a consolidation of Rogers and Shaw that, in fact, is a consolidation that leads to more market power in fewer hands in an industry that is already heavily consolidated, in an industry where consumers are already paying among the highest prices in the world for wireless and internet. So I think it's a sideshow, the fourth carrier discussion, but it is central to wireless competition. Where the policy breaks down, John, is we need independent wireless competition. And what that means is, just straightforwardly, not owned by a phone company or a cable company. When you look in the U.S. at companies that are independent for a long time, like T-Mobile. T-Mobile successfully brought prices durably down in the U.S. because they were not protecting any legacy phone or cable business. We're now in a situation where we're in Canada where all four wireless carriers are owned by cable and phone companies. And so what we're going to see is them defending their legacy business They're going to want to maintain prices to ensure that there isn't cannibalization of the legacy business, the so-called cord cutting, where people are letting go of their cable and home internet connections. That's a really bad thing for any one of these cable and phone companies. So what they'll do is keep wireless pricing high, and at the same time, they keep cable and internet pricing as high as possible. And people are sort of stuck. Whereas T-Mobile came in as an independent without a legacy phone or cable business, and people were able to cut the cord and say, I'm going to T-Mobile. And that forced Verizon and AT&T to reprice. And so the U.S. market today is 40% cheaper than the Canadian market. And that's the simple structural reason why. So we've done nothing today to solve the structural problem in Canada. In fact, we've gone the other direction. We've allowed more consolidation to happen.
Before I let you go, and we've spoken to you throughout this process, it's been a long process. We were talking about a couple of years here now. You know, in theory, you could have been that fourth player had you been successful in your efforts, and maybe there would have been people saying, well, hold on, you're part of this four-party invitee-only group anyway. I mean, what would you, do you think, been able to do differently that, say, Quebecor cannot do to encourage or foster more competition?
Well, this is just it. I'd be coming in, as I did with Wind Mobile, we came in as a pure play. We did not have any legacy phone or cable business that we were protecting. And so we brought prices down. And in that period that we were operating Wind from 2009, 2014, prices came durably down because Wind was not protecting any legacy business. We were focused on acquiring your wireless business, and that's all we had to offer. So we lived or died by selling you a wireless plan. We weren't selling you a bundle. We were selling you a wireless plan. We had to earn your business every day. So that's what's needed in Canada. By the way, that's what exists in all the other OECD countries. So what this government has done is backed Canada into a corner and put a 10-year hold on it, too, by the way, which I think will not last, where we've got all of the wireless companies owned by cable and phone companies. It's a great day for Bell and TELUS shareholders, with Rogers in disarray, with Shaw in disarray, with a massacre of layoffs coming. Quebecor in a tight box. Bell and TELUS are great investments for if you're looking at it from the street's perspective today.
Interesting. And I do have to let you go, but I mean, in terms of the layoffs, which do come from integration, but is there anything that you're privy to that we haven't seen or heard about yet on that front?
I mean, I know the business, and I know that the only way Rogers is going to finance this very expensive cable merger is we're going to see layoffs is a nice way to put it. It's going to be a massacre.